This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. Today I have two losing trades. So we have a second consecutive losing day, which accumulates to pretty much equal to the largest amount of drawdown that I've incurred on this top step eval. So if we look at the balance, it's now $51,420.26. So now I'm back a little bit under that 3K profit target, but I'm not worried. I'm still going to show up the following day and just do the same things. The only thing is I'm getting my bias incorrect because we have had moves that have entirely overlapped the previous day range, and I've been looking for continuation plays. So if we go to a 15-minute time frame and we look at Tuesday, so this is Tuesday, right? This is Monday. Now, because of how Monday traded and how the market's at the all-time high, we're in all-time high condition, whatever, I was looking for a continuation of this move based on the fact that this is 6:30 right here, that we dropped down in the Asia session. We had a strong divergence at the overnight lows. We had an SMT put in here. We had strong order flow pushing back inside the range. I was looking for a drop down to buy, and I did twice in here to see continuation of that move, but we reversed the previous day range entirely. Now, the following day, today, we had a really large down move yesterday, so I was looking for a continuation of this move, looking to sell the market as it drove above this high right here, thinking that this intermediate term high would stay intact, the market would break lower for the sell side liquidity below these lows, but we overlapped that range as well. So, one thing that I have noted, and I have this put down in my daily journal today. Let's go to view my day. It's October 8th, 2025, net P&L 139.44. Cool. If I go to the lessons that I learned today, what did I learn? The most difficult days for me to anticipate are those that completely overlap the previous day range without taking a high/low. It just doesn't agree with my language of reading the market. I'm looking for a continuation of previous day range, and it just overlaps it. I guess it's the formation of the Judas swing on the weekly range. So we had this today and yesterday, and if we zoom out to the daily chart and we remove all this noise that we have here, get it off the daily, we can see that in the near term, what we have been seeing is a lot of back and forth. We overlapped this daily range. So on Friday, we overlapped Thursday's range. On Monday, we overlapped Friday's range. Tuesday, we overlapped Monday's range. And now, finally, Wednesday, we overlapped Tuesday's range. So it's a lot of back and forth going on, and that's just really impacting my ability to read the market. Hence why I got the market approach incorrect yesterday and today, and why I'm now down. How much am I in drawdown? I am in $266.88 in drawdown. So 4 consecutive losing trades, but I'm not worried. I'm still not worried because I know all it takes is one solid setup to put me out of this hole, to take me out of this hole and recover all the drawdown that I've incurred over the last 2 trading days. But I do note how my drawdown tends to stack up very, very fast. When I get the bias wrong, I'm trying to figure out, why don't I ever just take one losing trade and walk away with that and be done? Somehow I always end up taking 2 trades on the days that I do lose. If you look at all my red days last month, 2 trades, 2 trades, 2 trades, 2 trades, 2 trades, 1 trade. I had 1 red day last month where I had 1 trade. That's it. Everything else, I tried that idea twice. So it seems like the idea that I'm getting incorrect, I'm taking 2 attempts at the idea. So why can't I just walk away with just 1 losing trade? That's a good question. But let's get into it. So how am I feeling today? I was not really seeing many reasons for the price to go higher, but several reasons for it to go lower because of what we did yesterday. So the main mistake today is we're at the all-time high condition, and we have a large down move in the previous day's range, and I'm looking for a continuation of that. But when we're at all-time highs and the daily chart is bullish, down moves set up the next up move, so higher time frame narrative. And this is exactly where I went wrong here. After the fact, after the session is over, go back, review my process, review my thought process pre-market and intraday, and connect the dots and figure out, okay, why did I get the bias wrong today? What went wrong today? What did I do wrong? So on the daily, we've had multiple drives above previous day high that failed and finally created a slide lower. But, and note this because this is important, yesterday's close tells me consolidation over large drop down, meaning I'm looking at the daily time frame. I'm noting how this is Tuesday's range. We dropped down. We took Monday's low. We traded into the daily BISTI and the daily change in the state of delivery, but we closed above it with this discount wick. If the market wanted to break lower, if we did have a actual smart money reversal and we're now looking for lower prices, this should be a large down candle that absolutely clears Monday's low. But we don't see that. It closes back inside the range and it closes above the daily gap and the daily change in the state delivery. That's actually bullish. So the daily does not support the idea of lower prices. And I note that yesterday's close tells me consolidation over large drop down, meaning the daily is telling me that we're probably not going to have a large drop down. But what am I looking for going into today? A large drop down. Why? Because of market criteria and how things were setting up. I saw no strong reason for the market to trade higher because it rejected that 1 hour and 4 hour SIBI that was left from yesterday. If we look at the 4 hour, we have this large gap left. And if we look at the 1 hour, we also have a large gap left. So I was noting the rejection of that in the London session, thinking we could potentially go lower, see continuation of the move from yesterday. I see absolutely no reason for it to go higher. The current setup indicates an intermediate term high is likely in and price could potentially break for overnight sell side at 9:30. So my trade plan was to look for a break lower at 9:30. I wanted to see it hold the smooth edge that it was creating pre-market. And by that, I mean this. Oh, that's a 4 hour, not that. This, I liked how I was leaving these equal lows down here. So I wanted to see it keep that intact, trade up, take the buy side there, reject that 1 hour gap, and then trade lower, break lower at 9:30. Go for these down here. I was still considering this a sell side liquidity pool because we just went literally one tick below the Asia low. So in my eyes, that's still a valid sell side liquidity pool to be targeting for the market to want to go down there. But obviously it didn't do that. So that's what I was looking for. So I'm looking for a price to draw back to 25,000 where there's a daily CIC, daily BISI, and this week's new week opening gap that's still an efficient and previous daily low. So really, there was a lot of reasons for me to anticipate lower prices. And I don't really have anything solid in here that tells me maybe I should be looking for higher prices besides the fact that on the daily chart, what are we doing? We're at all-time highs. We're in the all-time high condition. And yesterday's close is not indicative of lower prices, even though we've seen all these drives above a previous day high. We just keep pressing higher. This is what the market does at the all-time high. And the mistake that I made was thinking we have made a top and now we're going lower simply because we had a drop down on Tuesday. But if you zoom out and you take a look at what Tuesday actually did on the weekly range, look at this large sell side liquidity pool that we had engineered yesterday. The market attacked. So boom, we've had a drop down. Monday, we had a new week opening gap that it just ran away from. It just completely disregarded it. Tuesday drops back down into that, clears the sell stops. So now anybody long from Monday, they're wiped out. The slate is wiped clean. And now that we have this large drop down, well, now it's going to entice short sellers the following session today, like what I was doing. But what are we doing on the daily chart? We're at the all-time high. And if you look at how that daily candle closed yesterday, does not indicate lower prices. So that's the main issue today, is just simply the trade plan that I was looking for. The idea that I framed was not supported by the daily time frame, and therefore it does not work. So I was looking for price to draw back to 25,000, never got down there, never went back there at all. So what did I do wrong? My bias lacked reference to the daily and was framed off market criteria and what happened yesterday, so I was incorrect. And y'all know that I really like to play those sells right at 9:30. So if you put the executions on the chart, today I was actually extremely confident in the idea of lower prices. It'll be better if I just pull up the session recording. Guys, do yourself a favor and record your sessions. If you have the capability to do so, I know it might make your TradingView application lag or something like that. But if you can record your session, definitely do, because you can go back and literally just watch the session again and figure out exactly where you went wrong. What's the downside to that? Absolutely nothing. So you can see this is 925, right? Noting the smooth lows left below, smooth edge left below. I'm pretty confident in the idea of lower prices. It's what I'm stating in my pre-market plan. I want to see the market fail above this high, reject the 1 hour gap, and then I'm going to look to sell it, anticipating a breakdown at 9:30 to target these lows first, and then 25,000 mentioned in my pre-market plan. So watch this candle right here. This, in my opinion, was malicious intent, and I thought this was the manipulation move that I was looking for above this high. So as soon as I see this candle snap and trade in the other direction, I'm thinking, boom, we're going lower. So watch how it snaps back. Wait for it, wait for it, wait for it. And it's suddenly going to snap back down into the range. boom, like that. I'm thinking, oh shit, okay. Buy stop's taken 100%, snap back down into the range. We have this extension traded above that minor buy side liquidity pool. Now I want to see if it can reverse this gap, and that's going to confirm the sell for me. So does it inverse the gap? So it looks like here I was actually a bit early, way too early, because this candle hadn't even closed. It hadn't even confirmed that the market was going to inverse this gap, and here I am selling short before that even is inversed as it was getting ran through. So you can see how confident I was in the idea of lower prices based on my early execution, right? And if you look at the bottom right, you can see that the time is 9:28. So this is before the 9:30 open. So I violated one of my rules here because I was too confident in the idea of lower prices and a break lower at 9:30. And this could be primarily influenced by the fact that on Thursday, I had a really solid short sell at 9:30. So this is the thing. I have these really good trades, and they typically come at 9:30, and they're sells that just come boom right at 9:30. Now, whenever I catch a trade like this, it influences my decision making the following days because now I'm looking for a similar move like that. In this case, that's exactly what I was doing here, right? But it was a bit early. We still do end up violating that gap. So I guess I would have put risk on anyways. But this is before the 9:30 open, and I have a rule that says I cannot trade before pre-market. I cannot trade before the 9:30 open. I cannot trade pre-market. So in this case, 9:30 opens, and I think, okay, this is a good trade. It's got everything that I need to see. It's in direct alignment with my plan. That intermediate term high is still staying intact. And I'm thinking we're going lower, but we don't. Okay. Well, that trade was a bit early. Now, how am I feeling after that loss? Let's go back and look. If we look at the live trading check-ins, if my idea was valid, it would have gone lower from there, so it's incorrect. So right at 9:33, I'm noting that my idea is probably incorrect because if it was correct, then we would have had a break lower there, 100%. I was really confident in the market going lower from there, but it didn't do that. And what do we see instead? 1, 2, 3, boom. 3 solid up candles right out the gate at 9:30. This is looking extremely bullish, extremely strong, and I'm not thinking that my idea is playing out. So immediately I marked that idea as incorrect. At 9:33, I recognize that my bias is incorrect. It could potentially still go lower, but the way it's trading right now with immense strength out of the gate is more contingent with the new condition. Consolidation on the daily. So one good thing about today is I'm starting to pick up on the changes in condition from the daily time frame. Because if you look at the daily, if we just look at the 4-hour, we don't even really have to go up to the daily. We can see that back and forth that we see on the daily time frame, right? We have quite a bit of back and forth. Large down moves, large up moves, large down moves, large up moves, large down moves, large up moves. And that's what we're seeing right now. And finally, we've had a large up move that follows that large down move that we had that sudden drop. And each candle is basically overlapping the previous candle's range. So not ideal conditions at all. But I'm starting to get to a point where I can recognize those shifts, those changes in condition. Although I guess you could say I was a bit late at this point in time because the indications for the market to want to go higher were there today. But I ignored them. I ignored the daily chart. Although after 9:30, I do note, okay, this is really strong. We're probably not going lower today. So we're definitely in a new condition. We're definitely in a different condition with the market just going back and forth. I didn't think we were going to make a new all-time high. I didn't think we were going to press all the way for a new all-time high and just be extremely bullish with absolutely no retracement. I mean, we literally had no retracement intraday. None. Besides this. Maybe this. It's really small retracements. Overall, we just lifted up. We just went. We just went, and we never came back. So not an ideal trading for me at all. This is not optimal for my trading model, which makes me think. Let's go to the lessons from today. Potential change. Base engagement around my degree of confidence in that session, not day of week and economic calendar. If I see something I'm confident is going to set up, engage. If I don't like how that day is setting up at all, avoid it entirely. So what I have in place right now is I'm avoiding Mondays with no news driver. We had a Monday with no news driver this week. But if we go back to Monday, it actually presented something that I was extremely comfortable with taking. I would have been comfortable with taking this sell at 9:30 because of the damage that we did here. And we have these smooth lows, but here I was tape rating this move, just watching it play out, knowing that I could definitely put risk on here and sell this gap short and target these lows and be done. 3 contracts in and out, but I'm not doing it because I didn't approach the day. It's a Monday with no news driver. I'm opting to sit out of it. And then overall for the daily bias would be bullish. So you wait for the market to rebalance the range of the impulse swing that it's made. I'm not thinking we're going to make a new low a day because of what we done in the London session. We took sell side there, strong impulse swing, wait for the market to rebalance that, and then look for the continuation, make a new high day, and we have that right here, and it comes at 10:30. So there's opportunity for me to play the market to the downside and the upside on Monday. So essentially, it was a good trading day, but I opted to sit out of that. And then Tuesday, I was pretty confident in the idea of higher prices. It just did not deliver that, and I had the bias entirely incorrect, which happens, right? But going into today, I'm looking at the setup. I'm looking how, for the most part, we just had a consolidation in the overnight and pre-market session. We're opening in the middle of that range, which is not ideal for my trading model at all. Now that I think of it, if I've done the work of the past of noting what conditions are not optimal for my trade model at all. I don't think I have them noted in the Miro board, although I might. Let's take a look real quick. So most of the work that I'm doing off the charts is in Miro, and I'm just really defining everything, really trying to build my system, my process, and it's all laid out here visually, and it's easy to navigate and it's easy to see and organize things. So I think I do have it here. Okay, so if we go to market criteria, do nothing, no overnight or pre-market volatility, overnight and pre-market range, and price leaves it at 9:30. So this is literally the exact condition that we had today. We had an overnight pre-market range and price just left it at 9:30. So we had an overnight pre-market range. We basically were just sideways, and then we just left it at 9:30. Not ideal for my trade model at all. So instead of basing my engagement around, okay, we have nothing on the economic calendar and it's Monday, I'm not going to trade, I think what I should do is base my engagement around the degree of confidence in that session. Like, am I comfortable that something can set up, or am I not comfortable that something's going to set up? Because if we going into today, I note the consolidation. I'm like, fuck, this is probably not going to be a good session for me. But I still trade it in anyways because it's Wednesday. Well, I don't have to trade it at all in the first place. So, God, I got to take a shit. So what I'm thinking about doing is just completely eliminating the days that just don't make sense at me at all. For example, we had this consolidation overnight in pre-market. We opened in the middle of that range, and we just left. So why am I even trading this day in the first place? It's not optimal for my model at all. But Monday was, but I opted not to trade it. So I'm just going to come to the market and see how things are setting up, and then determine if it's worth trading or not, and then I'll move from there. Instead of just basing my engagement around the economic calendar, and that's it. But other than that, I think that's going to be it for this session. Kind of a boring recap. I mean, nothing really crazy going on, right? We're still up in profit. We are still trading good. I mean, obviously I got the bias incorrect the last 2 days, and that's costing me, but all it takes is one good solid trading day. I got that 30% win rate, but look at my R multiple. This is what's keeping me afloat. We're still good. We're still up, and yep, that's it for this one. So if you liked the end, or if you watched the end, if you liked the end, let me know by liking the like, and I'll talk to you guys tomorrow.